Looking at two advanced indicators today from Quant Algo on TradingView.
Ah, okay.
And the idea is they're specifically designed to really sharpen up your entries and exits.
Interesting. So going beyond the basics.
Yeah, and the claim is pretty bold, aiming for high probability trades.
Yeah.
They're even talking win rates, potentially up to 95%.
Wow, okay, 95% is a huge number. That definitely catches your attention. It suggests it's probably about very specific high-conviction setups, right? Not trading every little flicker.
That seems to be the idea. Quality over quantity. Discipline.
Makes sense.
So that's our mission for this deep dive. Figure out what these tools actually are, how you set them up, and crucially, how they work together.
Okay, the synergy between them.
Exactly. How they might give you an edge in reading those real-time trends, finding clarity in the chaos,
All right, I'm curious. Let's get into it.
Okay, so this dynamic duo, the core problem we just touched on, traditional indicators often struggle. They can be slow or just, well, noisy.
Whipsaws, yeah. They react too late or get faked out easily.
So the solution presented here involves these two specific indicators, adaptive trend flow, and the other one is adaptive price zone, or APZ.
Adaptive trend flow and APZ. Got it. And they're designed to overcome those limitations.
That's the claim. To cut through the noise, offer a clearer and, importantly, a confirmed view of what the market's actually doing.
Confirmation is key. That's often missing.
And that's the core idea here. Their real power isn't just individual, it's using them together.
Like a two-step verification process for a trade signal.
Precisely. So let's start with the first one, adaptive trend flow.
Okay.
This one's your primary signal generator, basically. It's designed to give you really clear buy or sell signals, sort of the first alert.
How does it do that visually? What am I looking for on the chart?
It's pretty intuitive. There's a main plot line. When that line turns green and you see a little L pop up, that's your signal for a potential long trade, a buy.
L for long, green for go. Makes sense.
And conversely, if the line turns red and shows an S, that's signaling a potential short, a sell opportunity.
S for short, red for stop or sell. Okay, clear enough.
Setting it up in TradingView is straightforward. You go to Indicators, search Adaptive Trend Flow by Quant Algo, add it. Simple.
Right, but there are probably specific settings tweaks for this strategy.
Yes, exactly. For visual tidiness, first thing is in the Style tab. You can hide the background color. Just cleans it up a bit.
Okay.
But the important bit is the Input tab. You need to make a few changes from the defaults.
All right, what are they?
Change main length from 10 to 12, then change smoothing from 14 to 16, and finally adjust sensitivity from 2 up to 2.5.
Okay, 12, 16, and 2.5. Any idea why those specific changes?
The idea seems to be to slightly smooth things out, focus a bit more on sustained moves rather than tiny jitters, and fine-tune how quickly it reacts just right for this combined approach. Not too fast, not too slow.
Got it. Fine-tuning for the specific system. Makes sense.
So this adaptive trend flow is set up and dialed in. That's your first piece. But we need confirmation, right?
Yeah, the second part of the duo, the APZ.
Exactly. Adaptive price zone, or APZ. Its whole job here is confirmation, validating the signal from the trend flow.
So it's not giving its own primary signals, it's confirming the trend flow signals.
Precisely. It's providing that independent check. Is this trend suggested by a trend flow actually solid? Does it have underlying strength?
Okay, how does it show that confirmation? What are the visuals for APZ?
It works with a trend line relative to a zero line. Think of the zero line as like a neutral territory.
A baseline.
Yeah. If the APZ trend line is green and it's clearly above that zero line, that's your strong confirmation for a buy trend. It backs up the L signal from trend flow.
Green APZ above zero confirms green trend flow L.
Got it. And the mirror image for selling. If the APZ trend line is red and it's positioned below zero line, that confirms the S signal from trend flow. It validates the sell trend.
Red APZ below zero confirms red trend flow S. Simple enough logic. 2 layers deep.
Setting it up, simple process. Search Adaptive Price Zone by Quant Algo in TradingView. Add it.
And the input tweaks for APZ.
Yep. In the Input tab, change APZ length from 21 to 29.
Okay, longer period there, probably for more robust trend confirmation.
It seems likely, filtering out more noise. Then, change thresholds from 2 to 2.5 and adjust smoothing quite a bit from 5 up to 12.
29, 2.5, and 12. Got it. More smoothing again, aiming for stability.
Exactly. And you can tweak the colors and stuff in the Style tab to make it clear for yourself, of course.
Okay, so now we have both indicators set up with these specific settings. How do they actually work together? What's the playbook?
Right. This is where it comes together. The strategy, the entry and exit plan, it's all about that signal alignment. Both indicators have to agree.
No exceptions. Need both confirmations.
Correct. So for a buy trade, condition 1, adaptive trend flow shows that L's signal and its plot line is green.
Check.
Condition 2, at the same time, adaptive price zone shows its green line, and that line is above the 0 line.
Double check. Both green, trend flow L, APZ above 0.
Once you have both of those locked in, you wait for a fresh green candle to appear on your chart. That's your entry trigger. Buy when that green candle forms.
Okay, entry on the confirming candle. What about managing risk? Stop loss.
Good question. Set your stop loss just below the adaptive trend flow plot line. Gives a little breathing room, but defines a risk.
Makes sense. Using the indicator itself as a dynamic level. And the target.
Aim for a 1 to 1.5 risk-reward ratio. So if your stop loss is, say, 50 points away, you're targeting a 75-point profit.
Okay, 1.1.5 RR, a standard disciplined approach.
Now for a sell trade, it's the exact opposite. Condition 1, adaptive trend flow shows an S signal, plot line is red.
Red S, check.
Condition 2, APZ line is red, and it's below the 0 line.
Red APZ below 0, double check.
Entry trigger. Wait for a fresh red candle to appear. Place your sell order then.
Entry on the red confirmation candle, stop loss.
This time, stop loss goes just above the red adaptive trend flow plot line.
Okay, above for a short.
And the target. Still aiming for that same 1.1.5 risk-reward ratio, keeping it consistent.
Consistency is key in any strategy. Okay, that sounds like a very clear rule-based approach.
Right.
But does it, actually work? Any examples?
Yeah, the material we looked at includes some real-world examples to illustrate it.
Good, let's hear about them.
Okay, one example was a buy trade on Bitcoin using a 15-minute chart.
Bitcoin 15-minute, okay.
So the market might have been choppy, maybe confusing other indicators, but then adaptive trend flow gives a clear L, line turns green.
Signal 1.
Simultaneously, the APZ confirms its line goes green and pops above the 0 line.
Signal 2. Confirmation.
Then a new green candle forms. Entry triggered. You place the buy, set the stop below the trend flow line.
And the outcome.
In that specific example, the trade moved nicely, hit the 1.1.5 profit target. It apparently cut through the earlier noise and caught the real move.
Okay, that's one positive example for a buy. How about sells?
Yep, they showed a sell trade example too. Similar situation, but in reverse during a downturn.
Market heading down.
Trend flow gives the S signal, red line. APZ confirms, red line below 0.
Conditions met.
A red candle appears, entry triggered for the short. Stop loss placed above the trend flow line.
Target hit again.
Target hit again, yeah. Successfully captured the downward move according to the example.
So multiple examples showing the conditions being met and leading to the target.
Exactly. The takeaway seemed to be that when you stick to the rules, wait for that dual confirmation, the strategy is pretty straightforward to follow and can deliver consistent results by filtering for those high probability setups.
It sounds like the discipline of waiting for both signals is absolutely critical. No jumping the gun.
Absolutely. Patience and precision seem to be the name of the game here.
So summing it up, using tools like adaptive trend flow and APZ together, it really could give you a significant edge, couldn't it? Refining entries, managing risk better.
Yeah, and potentially boosting that win rate by being selective, focusing only on those trades where both indicators strongly agree.
It moves you away from guessing and towards a more methodical approach.
Definitely. And, stepping back from just trading for a second.
Yeah.
Think about this core idea. Combining specific complementary indicators instead of just relying on one single piece of information. How could that apply elsewhere?
I see where you're going. Like in making any complex decision, right? Not just markets.
Exactly. Whether it's a business decision, analyzing data for a project, even personal choices, seeking out multiple independent signals that confirm each other.
It leads to more robust decisions, fewer surprises, hopefully, like getting different experts to weigh in before you act.
Precisely. It's about building that layered understanding, moving beyond just a single perspective to get a more confirmed, reliable insight.
Yeah, that's a really powerful takeaway. Moving from a single data point to a confirmed insight. It's a valuable principle anywhere, really.
It really is. Food for thought.
Definitely.
Well, that brings us to the end of this deep dive into these potentially powerful trading tools and strategies. Thanks for joining us.
Yeah, fascinating stuff.
Until next time, keep digging, keep exploring, and keep seeking that edge.